Hi friends, welcome to Konexio Technical Insights. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty as well as on the different asset classes. We'll also study the derivatives data of both the indices. Now first of all, let us discuss what we have mentioned in our last video. In our previous video, we have mentioned that the primary trend is positive because of the monthly expiry. Nifty might go into a consolidation and we might see some zigzag movement, and any dips should be used as a buying opportunity. And the global markets were also waiting for some positive triggers, which was we were expecting regarding the US debt ceiling, raising of US debt ceiling, and the markets were poised for a positive trigger, which we have been or the markets have been waiting for the last couple of days, and that already has been done in the last week. So now the trend is clear, and the US markets also has ended on a very strong note on Friday with a positive gain of 700 points on Friday. So looking at that particular pattern, we feel that our markets are well poised uh, for a breakout of its lifetime high. Bank Nifty is just near its lifetime high, and Nifty is just maybe 300 to 400 points short of crossing its lifetime high. So definitely, we will see Indian markets crossing its lifetime high in couple of days or couple of weeks. So definitely, from these levels, the momentum is positive. Any dips should be used as a buying opportunity. So now, first of all, let us go to the US markets and let us see what is the trend in the US markets. So let us check out the Dow Jones chart. Now this is the Dow Jones daily charts. You can see it has given a breakout from a flag flag and pole breakout. On Friday, we have seen that Dow Jones has ended on a positive, strong note with 700 points of gain, and it has potential to test its lifetime high maybe in couple of weeks. So definitely, the momentum is getting positive in the international markets also. So definitely, from these levels, Indian markets might trade positive, might open with a positive gap on Monday, and any dips on Monday should be used as a buying opportunity. So now, friends, let us check out the daily charts of the Nifty, and we'll try to figure out what could be the trend for the next week. You can see in the last week, Nifty has consolidated throughout the week. You can see this was 29th May, and from whole throughout the week, Nifty consolidated in a very broad range. If we look at the hourly charts, Nifty uh, witnessed a zigzag movement throughout the week. It was a clueless trend. There was not a clear trend. It was difficult for traders to trade in the past week. So now at last on Friday we have seen Dow Jones giving a breakout, and Indian markets are also uh, poised for an upside rally from this particular level. So definitely the momentum is positive, and we might see a positive trend in the next week. Any dips should be used as a buying opportunity. So friends, let us check out the important supports and resistance level in Nifty for the next week. So the first support in the Nifty is placed at 18,464. Below that, the second support is placed at 18,333, and third support is placed at 18,202. Whereas on the upside, the first resistance is placed at 18,620, 662. Above that, the second resistance is placed at 18,781, and third resistance is placed at 18,888, which is its lifetime high. So definitely, the momentum is positive. On Monday, we might see a positive gap up opening, maybe huge positive gap up opening in Nifty, maybe 100 points or 80 points. Any dips on Monday should be used as a buying opportunity, because we might see a sharp short covering rally throughout the week in the next week. So one should avoid going short at the higher levels. So friends, now let us check out the derivative data of Nifty. You will see the Nifty call data. In Nifty calls, the action was seen in 18,600 calls, then 18,700 calls, 18,800 and 18,900 calls. Now here you can see there was a rise in the open interest, rise in the volumes. Uh, there was a slightly negative change in the option premium. You can clearly see there was the implied volatility is the lowest. It is just between 8.71 uh, and between 8.59. So the low implied volatility and the slight negative change in the option premium is clearly indicating that markets are poised for an upside rally from the current levels. Yes, on immediate basis, looking at the open interest and volumes, 18,600 could act as a major resistance. Once it crosses those levels, then Nifty has a chance to inch towards the level of 18,800 to 18,900 in the next week. So definitely the momentum is positive looking at this particular Nifty out of the money call data. Now let us check out the Nifty put data. In Nifty puts, you will see the action was seen in 18,500 puts, then 18,400 puts, 18,300 and 18,200 puts. Now here you can see there was rise in the open interest, rise in the volumes, implied volatility is between 9.13 and 10.71. Here there was a drop in the option premium. Now drop in the Nifty put premium is clearly indicating that the smart money has already been focused towards writing out of the money puts. That is clearly a bullish signal on the from these levels. So on immediate basis, 18,500 could act as a major support. Looking at the volume and open interest data. If it breaks 18,500, then only there are possibilities that Nifty might drift towards the level of 18,400 mark. But as of now, seems to be difficult to break 18,500 mark from these levels. So overall, looking at the charts and derivative data, the trend is positive. Any dips on Monday should be used as a buying opportunity. Now, friends, let us check out the Bank Nifty daily charts. On the Bank Nifty daily charts, we will try to analyze the particular trend. Again, in Bank Nifty daily charts, also you can see Bank Nifty has also witnessed a slight correction from Monday onwards. Throughout the week, last week, Bank Nifty has corrected. Now you can see on Friday it has formed an inside week candle on the Bank Nifty daily charts. So after a 3 days of fall and fourth day on Friday, it has formed an inside week, or we can call it as a harami pattern, which is termed in Japanese candlestick pattern. Harami pattern on the daily charts is clearly indication that we might see a sharp short covering from these particular levels. So one should avoid going short at the higher levels, or those who are short should try to exit short if there is a gap up opening and if there is an intraday cool off from the gap up opening on Monday. And any dips should be used as a buying opportunity looking at this particular pattern. So now let us discuss the important supports and resistance level in Bank Nifty for the next week. So friends, the important support in the Bank Nifty for the next week is placed at 43,706 is the first support. The second support is placed at 43,390 and third support is placed at 43,078. Whereas on the upside, the first resistance is placed at 44,179. Above that, the second resistance is placed at 44,692 and third resistance is placed at 45,066 on the upside. These are the spot levels. Traders are suggested to follow these particular levels and try to trade in the direction of the primary trend, and the primary trend is positive. Any dips should be used as a buying opportunity looking at the candlestick patterns. So friends, let us discuss the derivative data of Bank Nifty. On Bank Nifty, you will see on the screen in Bank Nifty call option data, the action was seen in 44,000 calls, then 44,500 calls, then 45,000 calls. Now here you can see there was rise in the open interest, rise in the volumes. There was a significant drop in option premiums. That clearly indicates that smart money might have uh, uh, done out of the money call writing. But looking at the volume and open interest data, we feel that on immediate basis 44,000 could act as a immediate resistance. But on Monday we are expecting a gap up opening. So after a gap up opening, we might see a sharp short covering of this out of the money calls. So definitely we might see a vertical rally maybe on Monday, Tuesday, or Wednesday. Yes, we might see intraday pullbacks, but that pullback should be used as a buying opportunity. So above 44,000, Bank Nifty might take a pause around or take a resistance around 44,500, and above that 44,900 to 45,000. So looking at this particular data, we feel that we might see a sharp short covering in Bank Nifty out of the money calls, which were seen strong writing, and that will propel Bank Nifty to move on the upward trajectory on in the next week. So, friends, now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 43,000 puts, then 43,500 puts. In 43,800 puts, then 43,500 puts, and 43,000 puts. Now here also you can see there was rise in the open interest, rise in the volumes, rise in implied volatility. It was between 12.26 to 13.94, and there was a significant drop in Bank Nifty put option premium. That means the Bank Nifty option traders had already might be thinking that Bank Nifty might remain in a range. So that is the reason why we have seen there was a strong writing in Bank Nifty calls as well as in Bank Nifty puts. Now looking at this data, we feel that on the immediate basis, the support could be seen around 43,800. If it breaks, then it might Bank Nifty might drip down to the levels of 43,500. But looking at the international markets and SGX Nifty, we might see a strong gap up opening on Monday, and after that, any pullback on intraday basis on Monday, that should be used as a buying opportunity, because we might see a sharp short covering in Bank Nifty calls uh, that will propel Bank Nifty to inch towards its upward trajectory. So looking at the charts of Nifty and Bank Nifty and studying the derivative data of Nifty and Bank Nifty, uh, the momentum is positive, have turned positive for the next week, and maybe in couple of weeks or days, Nifty and Bank Nifty will cross its lifetime high. Any dips should be used as a buying opportunity from these levels. So, friends, now let us come to the final segment of our show, which is positional data or positional call. In positional call, I have identified one stock, the name from the capital goods. The name of the stock is Larsen and Toubro. Let us check out the chart of LNT. This is the daily charts of the LNT. In LNT, you can see the stock. The stock has formed an expanding triangle pattern. Currently, the stock is just near the support trend line. Last 3 weeks, the stock was in a consolidation after a sharp fall from the levels of 2,416. It has taken a pause almost around 2,160. Now, looking at this particular pattern and data, the price volume action is clearly indicating that stock is on a verge of a breakout of the last 3 weeks of congestion. The RSI is also positive. The volumes are slightly rising, so the stock has potential to test its lifetime high in couple of maybe months, maybe in next 4 to 5 months. So, swing traders, positional traders, long-term investors, short-term investors can accumulate the stock in the range of 2,234 and on corrections to 2,200 for an upside target of 2,416 in next 3 to 4 or 5 months. It is a positional short-term call. So investors, swing traders can buy the stock in the range of 2 to 2,234 and on corrections to 2,200 for an upside target of 2460 in short to medium term, or maybe in next 4 to 5 months. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.